A new crypto exchange might be launching soon from an unexpected founder, and is Bitcoin's price being manipulated? This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO. And as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Ethereum Layer 2 scaling protocol Polygon is carrying out performance testing of a zero-knowledge rollups, or zk rollups, technology ahead of a full integration with its mainnet. Ryan Wyatt, president of Polygon Labs, responded to the co-founder of Polygon, Sandeep's tweet about the launch of the zkEVM coming soon, saying, "The world is coming to Polygon. We're launching our zkEVM chain years ahead of what anyone thought we could do." Polygon's zkEVM is the first zero-knowledge scaling solution that's fully equivalent with Ethereum. All existing smart contracts, dev tools, and wallets work seamlessly. Zero-knowledge rollups, or zk rollups, are Layer 2 scaling solutions that increase throughput on Ethereum mainnet by moving computation and state storage off-chain. zk rollups can process thousands of transactions in a batch and then only post some minimal summary data to the mainnet. This summary data defines the changes that should be made to the Ethereum state and some cryptographic proof that those changes are correct. These proofs are called zero-knowledge proofs, or zk proofs, that allow users to prove something that is true without giving away any other information. To achieve this, it uses algorithms that accept certain data as input and produce true or false as an output to show the validity of claims made by the provider. The development of the technology, called Polygon zkEVM for Ethereum Virtual Machine, has been ongoing for 3 years by the Polygon Hermes team. The team has already confirmed that zero-knowledge proofs are possible on Ethereum by generating over 12,000 zk proofs in a primary version of the zkEVM testnet. 2 years ago, the Polygon team estimated that developing zk rollups with EVM compatibility would take up to 10 years. Given the strides made, the team describes zkEVM as the endgame, combining advances with Layer 2 scalability and fast finality. Binance will allow institutional investors to keep their collateralized crypto used for leveraged positions off the platform. Binance said in a statement on Monday, the exchange will enable investors to post collateral with Binance custody, which will hold their assets off the internet in cold storage wallets. Once traders are settled, the assets would then become accessible to the user again. The feature, called Binance Mirror, could be a major blessing for crypto investors trading in the leveraged markets, as most crypto traders have to keep their collateral on exchanges for trading. However, using cold storage wallets means users can continue to trade crypto during volatile sessions without massive outflows on an exchange. Users' assets would also be protected against on-chain hacks, to which hot wallets are vulnerable. Binance notes that assets in the cold storage will be kept safe as long as the mirror position remains open on the Binance exchange, which can then be settled at any time. The crypto exchange also detailed that assets held in Binance Mirror account for more than 60% of all assets secured in Binance's custody. The exchange said Binance Mirror experienced significant growth during the final quarter of 2022. The collapse of Binance's rival FTX in November last year prompted fears about crypto exchanges' ability to keep users' assets safe. Binance said, "This is an exercise to build trust among institutions that their funds will remain safe. It's a positive development that shows Binance is moving towards becoming an institutional-focused crypto exchange." BNB Chain has completed the burn of over $575 million worth of its native BNB tokens as part of its BNB Burn program. Token burn refers to the process of permanent deletion of coins from their circulating supply. Over 100 million BNB, or half of its total supply, are intended to be removed from circulation through a burning process and eventually keep only 100 million BNB tokens in circulation. This commitment is automatically honored each quarter and calculated according to the auto burn formula. The figures are reported quarterly, and the mechanism is independent of the Binance centralized exchange. The auto burn mechanism adjusts the amount of BNB to be burned based on BNB's price and the number of blocks generated on the BNB Smart Chain during the quarter. Solflare, a wallet on the Solana network, announced on Monday that its users can now pay higher gas fees to muscle through network congestion. In-wallet transactions will automatically be prioritized with the current market price for fees, ensuring that your transactions are included faster than those in other wallets. Solflare will automatically detect whether the Solana network is under load and slightly increase fees to prioritize your transactions over others. The company tweeted separately, "When it matters the most, your transactions will go through and be fast." Since its launch in 2019, Solana has become a popular blockchain for NFTs and decentralized applications due to its speed and low cost. Still, those benefits have caused the popular network to fall victim to the network congestion when it attempts to handle a rush of transactions. Priority fees will also help make a blockchain network more stable by preventing users from hammering the Solana network with repeated transactions in the hope that one of the transactions will go through. Solflare says priority fees are already live in its app on the web, its browser extensions, and for in-wallet transactions, with mobile and app launching soon. After the collapse of Terra in May, several firms have been gravely affected by the ripples of Terra's fall. 3 Arrows Capital was definitely in the headlines as the 3AC founders reportedly went into hiding, and rumors of them spending $50 million on a yacht despite billions of dollars in debt were floating around. Now, according to the latest revelations that have surfaced, 3AC founders Suzu and Kyle Davies are looking to raise $25 million for their new crypto exchange, GTX. The announcement of fundraising comes 2 months after the collapse of the crypto exchange FTX, which left more than 1 million debtors without their money. According to the pitch deck, the new exchange makes use of the current circumstances by providing depositors with the opportunity to transfer their FTX claims to GTX and earn immediate credit in the form of a token called USDG. The name of the exchange is a play on the acronym FTX. In fact, one of the pitch decks for GTX begins with the sentence, "because G comes after F." The news will undoubtedly raise concerns about how stable the exchange can be and how it will be different to build transparency and trust. The 3AC co-founders are also collaborating with the co-founders of CoinFlex, Mark Lem and Sudu Arumagam, and according to the decks, GTX will use CoinFlex's technology to establish the exchange and legal counsel to manage the onboarding of claims for all the recent crypto companies that have gone bankrupt, such as BlockFi and Voyager. The new exchange is planning to begin operations likely next month. Bitcoin has gained nearly 28% this month, hitting the highest since early November. The popular narrative on crypto Twitter is that traders from Coinbase have pushed the cryptocurrency price higher. However, the exchange hasn't been the only source of bullish pressures for the cryptocurrency. The Coinbase Premium Index, which measures the spread between Coinbase's Bitcoin and USD dollar pair and Binance's Bitcoin and USDT pair, turned positive last week and rose to 0.039 over the weekend, the highest since late October. In other words, the indicator suggests that buying pressure on Coinbase has been relatively stronger. Institutions prefer publicly traded and regulated Coinbase over offshore entities like Binance, which are considered a proxy for retail investors. However, another indicator called the cumulative volume delta, or the CVD, which measures the net capital inflows into the market, suggests the rally began with Binance-based entities bidding for Bitcoin with BUSD, a fiat-backed stablecoin issued by Binance and Paxos, in the perpetuals futures market, and also that buyers from Coinbase and other exchanges joined the buying later. A rising CVD means more buyers are in action, while a negative sloping line implies that there are more sellers. Twitter user ExitPumpBTC compares the cumulative volume delta for Bitcoin BUSD pair listed on Binance, the yellow line, with the CVD Bitcoin USD pairs listed on other exchanges, saying the yellow line has been trending upwards since January 11th, while the green line began rising 3 days later. In other words, Bitcoin's initial increase from 17,000 was mainly fueled by solid bidding in Binance's Bitcoin and BUSD market, while buyers from other exchanges, including Coinbase, stepped in later. Just buy low and sell high. But easier said than done. Watching that line to rise and go green would wear out all but the most enthusiastic arbitrage traders. Luckily, there's a system that automatically ensures that you can buy and sell your assets at your desired price. This is known as a limit order. Limit orders are directions given by the trader, aka you, to buy or sell tokens at a specific price or better. This affords better control over the prices you choose to buy or sell. This function is invaluable to any decent crypto trader, and now our partners at KyberSwap have just announced this service is available to their users. Simply head to the swap tab on kyberswap.com, click limit, select your token, and key in the amount you wish to sell, along with the token you wish to buy. Remember to set your expiry limit, then review your order and relax while you wait for your order to get filled. KyberSwap users can also opt in to subscribe for their notification features, where you receive an email notification when your limit order is being filled and even when it expires. Check out the article on KyberSwap's website on how to use limit orders, which I'll put in the link down below. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.